hear about sandboxes that, where startup can try. So, what are the ways today to reach out to you guys for a startup? Which are the ways? And what are the instruments that, to your experience, are working better than others?
Collaboration is very, very key and it's very important. In as much as I remember that sometime in 2017, I think maybe one of the earliest conferences on fintech in Lagos here, we met a young man who said he wanted to go into crowdfunding, for instance. And at the time he was saying this thing, apparently there was no regulation. But these things are already up, and people are already thinking about it. I have it on record that he made several visits to some of the regulatory places, and yet it was still a difficult thing for him to do that. I understand regulation can change. It will be difficult for regulation to change very, very quickly. But that is why collaboration is very important at the level of the regulators, and then at the level also of those who are innovative as quickly as they are bringing these products and they are bringing out these instruments. There has to be that platform. It's not just about the startups, it's not just about the fintechs, it's not just about the firms. I think it's a good platform you have something like this, but outside this, those who will be supporting fintech should always reach out to the regulators as early as possible. Seminars like this are very good, but at the end of the day, policy making is a different ball game entirely. So if you don't reach out and you don't get closer, you can talk about these conferences. Actually, I wouldn't know when the report of this conference where it's going to end. But at the doorsteps of the policy maker, we are here, but of course, we are representing our respective institutions who understand things that happen there. We sometimes have the expertise, sometimes we don't. So we need a framework where the organization is structured in a way that it allows the freedom of innovation itself to take place without being encumbered by some of the practices, either through organizational structure or maybe by laws that, of course, for a central bank, you don't need, there are some regulation that you have control over. You don't need to go to the National Assembly to change those laws before you can permit certain things to be able to do that. So collaboration for me is very, very important. And then we also have to find a way to develop capacity at the speed of light. Financial technology sometimes go into the dark internet. And we only want honest people who are actually handling regulation and things like that. I think to some extent, we also need bad people who will challenge the resilience of our system so that whatever is coming, you'll be able to, go behind it and to be able to quickly respond to some of the challenges that may come.
Because we are evolving, you can't have regulation for everything. He mentioned crowdfunding. Our company law doesn't allow you as a private entity to solicit the public to invest in your equities. You must be a public company. And you can't have more than 50 owners of the company. But if you want to do crowdfunding, you are a startup, one-man business. Can you solicit public to come and invest in your securities? No. Does that mean that crowdfunding can be done? At the level of SEC, we sit down sometimes and deliberate over this and say, look at the case of Australia, the way they started, for instance. Does that mean that a PLC cannot do crowdfunding? No. So you can sit down and start thinking about it. Even though at the level of regulator now, we are trying to work around the law. But that will require us to work with CAMA, Company and Allied Matters Act, as well as ISA to see, because we see that it's important. We have a lot of startups in Nigeria. Many of them require capital. They are one-man businesses. They need money, yet they cannot sell their securities. But even at the crowdfunding, does it mean that you can't do a reward-based or a donation-based crowdfunding? Nothing says you can't. The problem is if you are now promising people return on their investment. So someone can sit down and even read the law and then be innovative as you can. How do we engage with the regulator? For us at the level of Security and Exchange Commission, we understand that fintech is very important. It's a moving train. If we don't join it, we are left at the station. On our website, for instance, we have a sandbox form that a fintech company can go to, click, fill. Then many of them, we've engaged them. We've had those that do blockchain make presentation to us. We've had guys that said they would like to have a crypto exchange, having presentation with us. So in this process, we learn a lot. We need to learn. But at the same time, we guide them and tell them, this is the law. However, what you are doing doesn't contravene the law, or it contravenes the law. But what we think you can do is this. So there are many opportunities. Recently also, we established a market-wide committee on fintech, roadmap for fintech in the Nigerian capital market. So we recognize this, and we try as much as possible to be opened and learn, and then grow together with those that may come up with innovative products.
At NIDA, National Information Technology Development Agency, we realize that the technological development of any nation is determined by the innovative strengths of such nation. So we have an SPV, a special purpose vehicle called Office of Entrepreneur and Innovation. Within this office, we kind of help startups, especially those in the fintech as well. We help them, we support them, we create platform and enabling environments for them. We bring them into events to showcase what they do. We support them with grants. We link them with networks. And in doing this, as regulators, we can feel their pulse, their pains, their challenges. We come up with guidelines and policies that makes the business environment, makes it enabling for them. Because as regulators, you don't just sit somewhere and assume things has to go this way or that way. You need to bring in the stakeholders. And when you're talking about fintech, for instance, you have to think of the innovators and the innovative firms involved in this technology. They drive this technology, they go through it. When you look at it, it's easier for you to look to get the risk and the challenges involved. And that makes regulation easier for you. Another thing is that helps startups when it comes to regulation is bringing all the stakeholders involved. Regulation is not done in isolation. When you regulate in isolation, especially in this age of disruptive technology, where you have bots and several other things that you have not even imagined is yet to be launched. So when you regulate in isolation, the regulation, rather than supporting the technology, it cannot inhibit the technology. So what we do, we also have Office of Local Content Development that looks into the creation of technology and backs up what the OIE office does. What this means is, it's one thing to be supported, like go into this innovation, look into it, bring out new solution. It's another thing to help you to go into the market and get some financial benefit from it. And then it's another thing to look at the environment and create enabling environment for you. For instance, everybody is talking about the Global Financial Innovation Network, where you have several countries coming together to share technology and everything. What we have to look into as countries and nations is to see how can we tap from this network. We don't want to be consumers of the network. We also want to be sellers within this network. Because one of the benefits you get is if we have our innovative firms or innovative startups or accelerators within our own country, it means that we can reach market, international market faster, being part of a network. For instance, if I'm a startup or an accelerator in an innovative firm, I'm being supported by the right regulators of the country to create an enabling environment. My country is part of a network, global network. It means I can reach markets and reach more audience, more customers faster than it would have been if I'm locally. I want us to start seeing regulators as our friends rather than seeing regulators as people that they kind of limit technology due to their policies or guidelines that they roll out. If we see them as our friends, if we collaborate with them, we'll be able to bring our regulations that is for us and not against us.
The NDIC doesn't necessarily issue licenses to banks or other services providers. But a general point to take from here is, if you want to disrupt a particular service that is offered in the banking industry, then are you expecting that the licensing requirement or the framework should be reduced for you? Because regulation is supposed to create a level playing field. So you have to look at it that you want to disrupt. Well, the guys that are in the field, this is the way or this is the requirement they went through to be able to offer such a service. But if you come as a fintech, are you expecting that the rule shouldn't apply to you? Should it be lessened? If you want such a thing to happen, my suggestion is you need to try to get that particular sector that you want to get license from. If it is from the central bank, if from SEC, if you need approval from NIDSDA or any other place, you need to hurry up to make them understand what it is that you want to offer in the fastest way possible. Perhaps that may lead to reduced licensing requirement for you. Another way to look at it, I'm not sure the regulators are sort of inhibiting innovation. Perhaps you can partner with existing players if you have adequate control, and that can fasten entry to market. Most of the players, I'm sure they will be happy to welcome you. I know that NIPS partner with a lot of players in the market, and they are sort of a neutral party owned by all the banks and the CBN. So that is another way to look at it. On the other side, at NDIC, to push through mobile money, when the regulatory framework was released by the central bank for mobile payment system, I think in 2009, we sat down to see, okay, which kind of insurance can we offer to these mobile money depositors or funds in the mobile money space so that there can be confidence in the system so that they can use it. And we actually looked for input from some of the players that sort of participated interest in the market. And we still interact with them. We revisit sort of the framework, the cover we have provided, what is going on. Before we offered that, we looked at the leading one that everybody looks at is in Kenya. We interacted with the Federal Deposit Insurance Corporation in the US as a leading deposit insurance agency and other agencies, and we still listen. So even if you are a player and you think there is something you need to do, not only for you, for the others coming, engage with the regulators. You can't sit down and complain on the outside without coming to engage with the regulators and assume something will change. You have to engage with them. When we do see them, okay, this is what you need to do. This is the difference between this and that. And then they will be able to, I think, accommodate you. Thank you.